Looking at agents from the perspective of financial service providers, that is the supply side, life will be easy if agents can be removed from the system. Many financial service providers are developing technologies and processes that will allow customers to carry out many of the transactions on their own. Customers will not be required to interact with an agent, which means that customers will have more opportunities to interact directly with the FSP with the use of technology, although most of it will be faceless or impersonal interaction. So, what are the tasks an agent usually performs? So, he acquires customers, does cash in, cash out, manages cash and liquidity, and maintains records. Technically, some of these tasks such as customer acquisition can be performed by FSP staff, and other tasks related to transactions can be taught to the customer. But looking at the relation between a customer and an agent, we have found in many of our researches that customers are dependent upon agents for almost all big and small needs related to their financial transactions. This is reflected in the shift of customers quickly from branches to agent points for services such as remittance. Customers believe that they get more attention, better respect, and patient response to their queries at agent points, which is not the case in bank branches. Therefore, most customers prefer visiting an agent point to a bank branch if the service is available at the former. In fact, for most illiterate customers who do not have knowledge of banking or financial systems and find it beyond their capability to learn how to do transactions, it is easier to hand over all headache to agent paying say 10 or 20 rupees, which is the equivalent of roughly 50 cents as service charge, than figuring out what has happened to their money if say confirmation message is not received, or if the money erroneously gets credited to wrong account, and so many other things that can go wrong. Paying an amount and shifting the responsibility to agent is more prudent for them than to learn say a 10 or 15 digit string for deposit and another 10 digit string for withdrawal and yet another 10 digit string for money transfer and so on. When we talk about financial inclusion, we are essentially talking about people who have never used modern banking, and in majority of the underdeveloped countries, they are usually illiterate. Unless there is a human interface and personal touch, they are not likely to enroll and use the services. Instead of trying to do away with agents, they need to be integrated into the network. They should not be treated as outsiders, but as an integral part of the delivery chain. Agents need to be appointed very selectively, they need to be trained during induction and later at regular intervals. They need to be groomed so that they represent the financial institution the way an employee will. Their potential to add to the business is tremendous because they have the knowledge and relations in the local community which an employee may not be able to build over years. And for financially excluded segments, technology just cannot replace human beings, at least not in the immediate future.